It's another business day. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here. And it's still a war world going on in many parts of, well, some parts of the world, but affecting everybody. When you thought that you were in your little hedged area, you find out that the impact of the war going on from Israel to the United States, Iran, spreading is affecting you also. And we'll bring that closer to you on this episode of the program. I'm Ini John McCoy. Let's start from what happened in the market yesterday. The market closed positive, recovered from the negative of last week. It was up 1.39% for the all share at 195,514 for the all share. Equities is back at 123.48 trillion naira. The activity charts yesterday saw some positives. Also, volume, value, and deals. The deal were more than 84,000. That's a lot for one trading session. Top gainers, NGX, yes, the father or the platform on which everyone is trading. That was part of the gainers yesterday. Sometimes we forget to trade in NGX. Let's patronize NGX. All right, NGX Group yesterday gained 10%. Aradel also gained, as well as rates also. And top losers were Custodian, Lotus Hall, and Nichols. They were the top losers. Top trade, FTG Insurance, Japol Gold back again in our faces from last week. UBA also was a top trade at the close of trade yesterday. So, the good thing is that we saw a recovery in the midst of the war. I'm going to ask what's going on. Sentiment around the oil and gas is now affecting Nigeria's equities market. How long can that last? We see it's even affecting the currency now, but let's leave that for later on the program. See what's happening in the global oil prices. Prices rose for a third day today. The widening U.S.-Israeli conflict with Iran and threats to shipping through the Strait of Hormuz has heightened fears of supply disruptions from the key Middle East producing regions. So look at the price this morning. Yes, we finally hit $80.37 a barrel. Oil went up 3.3% for Brent. Yeah, that's the reality now. And then almost 3% for WTI, $73.02 a barrel. Everybody knows what's causing this now. Of course, the war going on, and tankers and container ships are avoiding waterways. Insurance, is going up with all of this. So insurers have cancelled their coverage for vessels. A lot of risks there. The concerns about transiting the waterway are increasing. Iranian media report that Iranian Revolutionary Guard senior officers saying that the Strait of Hormuz is closed and Iran will fire on any ship that's trying to pass. What a world we're living in. Analysts expect oil prices to remain elevated over the coming days while the market focus on the impact of escalating Middle East conflict. So it's everybody's business now, one way or the other. And that's why the Petroleum Products Retail Outlet Owners Association of Nigeria, Petroan, again, they are emphasizing the urgent need to consolidate and strengthen Nigeria's domestic refineries through the provision of adequate and consistent crude oil supply. The national president of Petroan, Dr. Billy Gillies-Harry, believes that this is a proactive approach to minimize the impact of external geopolitical shocks on the nation's petroleum market. His concern is obviously over the ongoing military escalation that is involving United States, Iran, and Israel and allied nations. We've seen it spread and its far-reaching implications for global energy industry, particularly Nigeria's petroleum sector. Following the hostilities in the Middle East, particularly around the strategic Strait of Hormuz, through which approximately 20% of the world's crude oil supply and a significant portion of global LNG pass daily. And this has triggered sharp volatility in international oil prices and heightened uncertainty regarding supply continuity. And closely related to that, Dangote Refinery has increased the ex-depot price of premium motor spirit from 774 naira to 874 naira for a litre, and that's about 100 naira increase. This is according to petroleumprice.ng. The adjustment, which takes immediate effect, comes amid the sharp surge in global crude oil prices, which we have seen this morning above $80 for Brent. Consequently, petrol loading previously halted at midnight has now resumed at the new price, while the pro forma invoice issuance has reopened strictly based on the revised rates. Meanwhile, approved marketers around the refinery have begun adjusting their selling prices in response to this. I'm sure you've seen it on your way to work this morning. Market checks indicate that several marketers are now offering about 934, I saw a bit of that, for a litre, while a few depots have fixed prices slightly lower than 895. This is the immediate effect. So what else can we expect? How can this spread even further? Well, right here in the studio to show you how important this conversation is, we have the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rouhani. Mr. Rouhani, good to see you in the studio. This obviously is a very big issue, the war in the world, and some people thought Iran is very far away from Nigeria, but it is obvious. You're paying more for petrol now, so you know it's your business, everybody.
Everybody.
Yeah.
And everywhere in the world.
And everywhere, not just Nigeria.
Okay, so today our discussion is about what we call geopolitical chaos and its impact. And to understand this, let's start from understanding the fact that, one, there's a geopolitical effect, which is the relationship between nations. We have aligned nations, non-aligned nations. And you also have the geostrategic and economic effect on the financial system. And finally, we'll be talking about Nigeria and what it means to us. So to understand this, first of all, the top 5 economies in the world today are the United States, which controls about 27% of GDP, $30 trillion. Closely followed by China, which has $19 trillion. Germany, $5 trillion. Japan, $4.28 trillion, and India. So of the top 5 economies in the world, Nigeria has strong trading relationships with the United States, with China, which is our largest trading partner, with India, and also Germany and Japan.
And I learned that Nigeria supplies about 52% of crude to the United States.
Well, no, not really. It used to, but not now. The U.S. is virtually self-sufficient.
Okay.
But today, let's go back to that slide.
The first slide, please.
Yes.
Thank you.
Trading economies, the countries that control global trade, number 1 is $6.3 trillion, that's China. The United States, number 2, Germany, number 3, Netherlands, number 4, and Japan, number 5. So 1, size of economies, 2, trading, because everything that's happening in the Iran and all of that affects economic output, affects trade. Then top 5 oil producing economies in the world. Number 1, United States, 30 million barrels a day. Number 2, Saudi Arabia, 12.8 million barrels. Russia, 11. Canada, and then China, right? These are the producing economies. Consuming economies, we have United States number 1, China number 2, 17.5, India number 3, and Russia number 4, and Saudi Arabia number 5. So this just to set some context. Now, chronology.
Sorry, Mr. Rouhani, before you go on. So we saw those big economies.
Yes.
We see the United States is deeply involved in this.
Yes.
I don't know what they're saying about Saudi Arabia. There's some threats. Okay. Because that would mean the biggest supplier, the biggest consumer are involved.
Affected.
Exactly.
Yes.
And of course, the spillover effect will
No, we're coming to that. But let us first go back historically. You know, there was the bombs in Venezuela, New Year, right? And then, if you go forward.
The next slide,
please. So we had, Venezuela, January 3rd. We had renewed calls to acquire Greenland, January 5th. U.S.-Israeli airstrikes on Iran, February 28th. And Iran retaliated swiftly. So this is what has happened. Now let's go to the next slide, and you'll see the effect. The countries of geopolitical concern. Right here, number 1 is Ukraine, and that's work in progress. We never know what's going to happen there. Iran, number 2, and now Iran is becoming number 1. Venezuela, right? Gaza, Greenland, Nigeria, and Yemen. So you can see the hot spots of the world, and anything can change. And there's a link and a correlation between what's happening politically and what's happening economically. and then one triggers the other. But it's important to know that Nigeria is a non-aligned country, so it really doesn't matter. Nigeria is non-aligned politically in terms of diplomatic relations, but Nigeria is also a beneficiary or also a victim of global financial uncertainty. So, what next? Today, as you can see, that's Nigeria there, that's Venezuela there, and scattered around the world. What used to happen, the United States has 3 levels of interest. Number 1 is vital interests, which means anything that threatens U.S. security in any form. The U.S. can go in there, do whatever it is, it's called it vital. Then you have what we call strategic interests, where the U.S. will consult with allies, go to United Nations, like what happened in Iraq, what happened in Kuwait. That is what we call strategic interests. Then we have other interests, which is general interests. So what has happened today is that Iran has been elevated from what you can call strategic to vital. That's why you went in and did all sorts of things.
Sorry, Mr. Rwan, do we know what causes or what drives that elevation? Because Nigeria is somewhere around there.
Nigeria is, at this point, you can say somewhere between strategic and general.
Okay,
right?
What could move? Because Iran is in the news now, because as you said, the United States has elevated it to vital interest. So what is it, or what could?
No, because vital interest actually means that it means that no matter what happens, a threat from that country becomes a threat to the United States. So you could say rhetorically, or you can say that you've elevated it, but in reality, Iran is not any different from Iraq or any different from Kuwait. But anything that stops the flow of oil into the rest of the world affects everybody in the world, but also affects the United States' interests, because the dollar is the leading trading currency of the world. The global financial system is all centered and structured around the world. So, around the dollar.
Yeah.
So, what next? See, the thing is that you are fighting to stop, there are 3 levels. One is that you engage your opponents. There's also the doctrine of you preempt your opponent. That happened in the Iraq crisis, where they said there were weapons of mass destruction. So the doctrine of preemptive structure means that you have 2 outcomes. One is mutually assured destruction, which means there's balance. There's like the non-proliferation treaty. Soviet Union, Russia, you cannot do anything. America cannot do anything, and there's balance, and the world benefits from that state of balance. There's the other one is that in the doctrine of preemptive attack means that you are assuming that you would attack and there will be no response. And then you end up with what we call the most unlikely and most unpleasant outcome, which is called solitary assured destruction. You have for mutually assured destruction where 2 of us balance out and nobody moves and everybody benefits. Solitary assured destruction means that I move, you die, and then I come out of it. But in China, they say when you go to war, you dig 2 graves, one for your enemy and one for yourself, and make sure it's not too deep, or you could fall in. So that is very important. So now that I've explained the geopolitical context. Now let's go to the economic context. There's what we call collateral damage. So Iran says, I'm not going to go down alone. Everybody's going to go down with me. So better stop everybody. So what do you have? Jordan, Iraq, Kuwait, Bahrain, Qatar, Saudi Arabia. These are very important countries from the question of oil, gas, petrochemicals, and all of that. And it's also the Strait of Hormuz is extremely important for moving. And
now we hear it's been shut.
Absolutely. So be careful what you wish for, because you may just get it.
Sorry, Mr. Rwani, I also want to understand. So a lot of people would not understand where this started on Saturday.
Yes.
By Sunday, Monday, we started hearing strikes in Dubai. I mean, that's the UAE. Why?
No, because you see, the thing is that that's what we call collateral damage. But it's important that all of us have a stake. In the mutually assured destruction mode, where everybody was protected, nothing would have happened. Iran was guided, America was looking at. So they
Israel.
must have everybody. Now, you've gone, once you stir the honestness, then all of these guys. So Iran says, I'm not going to go down alone. All of us are going to go down. So it brings another dimension to it.
So is it because of the military assets of the U.S. that's in UAE? Is that why they're involved?
Ostensibly, that's what it is. But the whole idea is that if you make enough noise and make the stakes so high, then every other person has something to lose. Because they say when night becomes day or day becomes night, everybody's house is affected. So that's what it is. Flight cancellations, closure. As a matter of fact, Dubai is the busiest international airport in the world. It has been shut now for 4, 5 days, 6 days. It has very serious implications for tourism, for hospitality, for aviation, for investment, and for technology. So these things are not just, these are no abstract concepts now, these are real. There's a real threat, what they call clear and present danger to the global economy. So impact on Nigeria. The reality is that our oil revenues, so we have it's two ways. One, our oil revenues will increase, our budget deficit will decline, the Naira will appreciate.
Naira is down, Mr. Wani.
That's okay. This is not the most efficient market. The reality is that if what we sell is oil, and the price of oil has gone from $64, it's up over 25%. Right? So our revenues are high, our currency becomes stronger. So there's no question. Logically, that's what will happen. So the thing is that, but we also, the other side of it is that the PMS price has gone up by 100 Naira, and it could get to 1,000 Naira as it is. What are the implications and why are you doing this? If you go to the next slide, you'll see that the Dangote's...
Let's have the next slide, please. Thank you.
Okay, that's the oil price, and you can see it has come all the way up here. It's up virtually 25%. And that is because it's being managed. In a runaway situation, this can go to 100, 120. This is what happened in 1974 during the Yom Kippur War. This is what has happened many times, even in 1979 when the Iraq-Iran war started. Right? Prices went through and global economy took a big hit and a shock. So this is what, but right now it's being managed. But
how is it being managed? Who's managing it?
The reality is, if you think that the oil markets are efficient and depend on supply-demand factors only, then you have another thing coming. There are political interests to keep it down. Remember, America is the largest producer of oil in the world. So they are both a consumer and a producer. So what we're seeing is that it's being managed, but you can only manage it for a short while. And oil is traded mainly in the futures market. So the spot prices are up, the futures market are flat because people expect a resolution around this. But no matter what happens, this is what you're seeing today. Brent oil has gone. For Nigeria, what's happening to commodity prices? Here, Brent oil is now, of course, you've seen it's 80.
About 80.
Gas is up. Cocoa is also up. So all our commodities, export commodities.
So, Mr. Ron, let me take you back to the petrol price again.
Yes.
I mean, we've seen, like you even noted there, 100 Naira and all of that. Yes. And people are saying that, why does it seem like we're too quick to just increase? Because, as you said, it's a futures market. So the stock that's at hand today wasn't bought for $80, obviously.
No, I don't think that's how it works. There's what we call the average price and the marginal price. The marginal cost is the cost of the next barrel. So you don't have to wait for and start pricing the 10-day supply you have. Even in China, they use the 10-day average. But let's think about it. What has happened is that the price of crude has gone up by 25%, but the price of petrol, if you do 100 Naira over the same, it's gone up only about 12%. So the Dangote Refinery has absorbed half of the price increase, right? Because if the price goes up too sharply, nobody will buy and you have a knock-on effect. So you are looking at that, and we do not know whether within the next 4 or 5 days there will be some settlement. It happened last year. It happened during the previous crisis. So the markets are very sensitive, but also watching a lot of things. There's massive inventory of crude all over the place. There's what's happening in the Strait of Hormuz. There's the insurance factor. And also people are watching. Luckily, the winter is coming to an end and we're going to the spring season. Luckily, driving period starts maybe in April, where people are going to see that. So for us, the fiscal deficit will be lower, our oil revenues will be higher, the naira will strengthen, because for every dollar increase in the price of crude, it has a knock-on effect on the naira. Central bank is also managing that. So you have the efficient management of the reserves. We have this, what we call a balance of trade surplus that is going to knock in. But we shouldn't be carried away because this is temporary. Within the next month or two, it could change.
Hopefully, we pray.
But remember that when Russia attacked Ukraine, everybody said it was going to be 1 week.
Exactly.
Guess what?
It's
5
4
years.
years.
We are in the fifth year right now. So be careful what you wish for.
So Mr. Rani, isn't this a contradiction? When we say the naira is expected to strengthen,
yes.
However, inflation is going to go higher. Obviously, with Dangote increasing the price of gantry price increase. I mean, how can we have a strengthening naira and a higher inflation?
No, it doesn't matter. Inflation is a function of so many things: food, seasonality, energy, and all of that. So we think that inflation will be higher than was originally projected. So if you're projecting, say, 13% inflation, it stays at about 15. It's not that it's going to go through the roof. However, on the other hand, you find that petrol and logistic cost is only part of it. Even though there's an increase in the price of petrol, we've noticed that in the last 2 months, even when the price of petrol came down, transport fares did not come down. When it went up, when it increased, we didn't see an increase in trend. So transport fares have been kind of inelastic. But I think 100 naira change could have some effect. But right now it's fasting season and Easter is coming. So global oil prices, like I said, increased by 25%, but Dangote only increased by 12%. So it's absorbing it. And if you look at what happened in China too, they use the 10-day average, it's about the same thing. So Chinese petrol prices went up only by about 12%, in fact about 15%, while the global oil prices are up 25%. So Dangote is bearing the cost. Now, this is the exchange rate, and this is where we see it. We think that the exchange rate begins to appreciate, but I don't think the central bank is going to be lured into a false sense of security, and therefore, because oil prices have increased, all of a sudden you allow the naira to appreciate wildly, because that's what we call the Dutch disease. So what we are going to see is that the central bank will manage it efficiently, manage it very prudently, so that the buffers we need to protect us from these shocks are there. If you have no buffers, then you're dead. So I think there's a sense of responsibility which the central bank, on one hand, manages it. And then the question of the fiscal deficit. I think the Minister of Finance and Coordinating Minister of the Economy has been trying hard to ensure that the deficit and the debt service burden does not become excruciating. So with a little drop in the interest rates and blocking the leakages, which is the most important thing. If you can block those leakages, then you will have what we call a positive multiplier. If you cannot block the leakages because of political spending and all of that, then Nigeria has another problem. But today, we are optimistic to the sense that reform fatigue has not set in, that also we expect that people are more sensible. If we go to the last slide.
The last slide.
Yes. Impact on consumers, transportation costs higher, increase in logistics costs, increase in price of domestic commodities, and strain on disposable income. You and I are going to, whether we like it or not, the impact of this thing in Iran is going to make it more expensive.
And consumers are crying, Mr.
Oh, yes, they're crying. They've been crying for a long time. So
we thought that we're having, a calm and certainty and all of that with the reforms. But all of a sudden we're having, what about imported inflation?
Well, because your exchange rate is appreciating, the inflation from outside is kind of ameliorated because the prices, right? The price is the naira equivalent of the imported commodity, but the naira equivalent with the exchange rate appreciating, you are not going to absorb it so much. But the trigger is that our exports, where if the naira appreciates, our exports become more expensive, and that could be the problem. So the strategic thing to do is to manage your currency the way the Chinese have managed what we call, whether you like it or not, it's called competitive devaluation. You actually allow your currency to depreciate a little bit to make your exports cheaper. Someone said, what, but you're only exporting oil. No, we have to export other things. But one big problem in this whole thing is that tourism, the creative industry, the new economy is affected. Once you have insecurity anywhere in the world, it affects. So travel will be down, tourism will be down, and the activities of your musicians. So people who had bookings, let us say, for example, Wizkid or Burna Boy had a booking to play in during the Easter, 4th and 5th of April in the UK. And then people say, I'm not going anywhere because we don't know what's going to happen.
I saw some of those reports this morning. Mr. Ryan, please do hold your thoughts. Let's take a short break. When we come back, we'll talk about some of those impacts, especially on the travels and tourism, the creative industry. They are hugely affected, and quietly so, because we're talking about oil and all of that, but there are some other, I've seen a lot of notices that's being shared by travel agencies, those vacation planning companies, and all of that. But we'll dwell on that a bit after the break. Please stay with us. Welcome back. Still watching Business Morning right here on Channels Television. And of course, the biggest news in the world now is the war going on against Iran between US and Israel. And of course, other countries, as Mr. Rwani will call them, seem to be collaterals at this time. We still have him, Mr. Bismarck Rwani, right here. Mr. Rwani, you were about to tell us the outlook. We've seen a crying consumer. We hope that cry will not last for long. But you're about to tell us the outlook.
The reality, what next? Geopolitical risks will remain elevated because this is not going to end very soon, right? So there's going to be some accommodation. Potential disruption around the Strait of Hormuz, that makes it more expensive. PMS country prices are already up.
Sorry, we have to carry our viewers along. When you talk about the Strait of Hormuz, where is that and why is that important?
The Strait of Hormuz, 20% of the global oil goes through there. And if not...
Who's in control of that?
Iran. But it's only about 25 kilometers wide. If any ship breaks down there, then it affects you. You now have to go through the Cape of Good Hope. You have to go all the way through Nigeria to South Africa to go to Asia. So oil that is going from the Middle East to Asia goes through the Strait of Hormuz.
And now Iran has said they shut it down. Any ship they see there, they will shut down.
No, well, there's Iran. There's also the Houthis in Yemen. So, and the insurance company said, no, we're not going to take that risk.
Yeah.
So for now, that makes a settlement, a diplomatic settlement, almost imminent, right? But how much equipment, what is the package of arms and ammunition? What does Iran have, and how long can it last before that? But this is
so you think we can arm twist Iran to open the Straits of Hormuz?
Iran, yes, Persia. They have almost 2,000 years of civilization. They know what to do, and it's going to be very difficult. Secondly, Iran is probably almost a monolithic state. So they're all the same. They are Shiite Muslims and all of that. So leave the political thing. What happens is that it's in everybody's interest for there to be a settlement.
Well, how much of it affects the U.S.? Because I believe the U.S. and Israel, they're leading this war.
Yes.
If they are directly affected by the shutdown, then perhaps something...
No, everybody's affected, because if global trade falls, global trade, over 75% of global trade is settled in dollars. About 60% of central banks of the world have their reserves in dollars. Right? So you cannot afford, the US cannot afford to have this whole thing break down. You can only have a temporary thing. And so, generally speaking, I think that geopolitically, there's an incentive to settle. Right? Look at what happened in Venezuela. You went in there, the opposition is still in, it's not there in power, but the government is in power. So it's easier said than done. Like Zbigniew Brzezinski said, it is easier to lead than to dominate. right? If you try to dominate, it becomes a problem. And that's why the whole idea of mutually assured destruction and containment is better than actually destruction, because you never know where it ends. So if we take it, and PMS price could rise if it continues indefinitely in Nigeria to 1,200, but also it will rise across all the countries in the world. And that could be very, very destructive.
Global inflation again.
Global inflation and shocks. Then all your foreign portfolio, because inflation is increasing, interest rates in America, which were expected to decline, will not decline.
And
right?
President Trump is very passionate about interest rate declining.
But that's the reality. You cannot do that. The FOMC committee is majority vote. He doesn't have the votes to bring down interest rates at this time. And, mind you, there is a midterm election coming in November. And midterm election is about the price of petrol, the interest rates on your mortgages,
employment,
affordability crisis. Now, so the Naira will strengthen in the short term, supported by higher oil price, and the gross external reserves will increase. Like I said at the beginning, the central bank managing the resources efficiently in terms of money supply, in terms of exchange rate, in terms of external reserves, but also very important is that the leakages and the political spending effect in Nigeria has to be managed. When you put these two together, you might have a stable macroeconomic situation. So right now, geopolitically, Nigeria is non-aligned. Economically, Nigeria is managing things to block the leakages. And finally, for the consumer, Dangote is absorbing part of the
some of it.
But
Mr. Irani,
the
capital market, I don't understand our market sometimes. I mean, we see red in all those global markets, but we are making money. Are we so detached?
No, there's what we call, at times you have an asset bubble, right? So an asset bubble, what we say is, will the sizzle fizzle? It won't take too long before the Nigerian market will correct itself and go along with the rest of the world. So there's nobody living in isolation. If the global market's sour, Nigerian market will only sour. It's only a question of time. But for now, you are happy. MTN declared 15 Naira dividend. Dangote declared 45 Naira dividend. And
waiting for Dangote listing?
No, the listing will
happen. 4 months left, yeah?
Yeah, in fact, maybe shorter than that.
The
earlier it does.
I hope the ordinary man like me and Ladi will be able to access
this. What we call democratization of economic ownership. That's what's going to happen.
Okay.
So
it's not for the big boys only.
No, it's for everybody.
Okay.
Right?
All right, Mr. Irani, thank you so much for bringing the picture close to us. Iran is not so far. No. Neither is Israel nor the United States. We all feel the impact. We'll take a break now. When we come back, and then we will still stay on this as expected, but we'll look at it from another perspective. Please stay with us. All right, yeah, I'm sitting now. So we're joining now, or being joined now, by the Chairman Shipping Association of Nigeria, Ms. Boma Alabi. She's obviously going to talk about how Mr. Irani did talk about the Strait of Hormuz, that's been shut, rerouting of ship, insurance companies raising alarm, how they cannot accommodate some of the risks, because obviously it's more risky now. Longer routes, more risk, that means more premium for insurance companies, insurance to pay. So let's have Ms. Boma Alabi now tell us from the maritime aspect, the shipping and all that, what we could expect from this war. And of course, apart from just the trade, there's also the people one, which is tourism. Before now, a lot of people have vacation packages set for this period, set for periods before now, and that's also being affected. A lot of notice have been shared by these companies. They are saying how they might have to repackage, rebook. If you want, some airlines, especially international airlines connected to the Middle East, they've already shared that to say you might need to rebook, request for refund if you book through agents and all of that. So what a time it is in the world at this time. Let's have Ms. Boma Alabi, Senior Advocate of Nigeria, joining us now. Ms. Alabi, good morning. Welcome to the program.
Good morning. Thanks for having me.
Yeah, good to have you. But I can't say it's a good time for the world. A lot of disruptions going on. How much of that is affecting your industry?
Indeed, it's a very difficult time. The level of volatility this war has caused in the shipping industry is just mind boggling. As you can imagine, the Strait of Hormuz is so crucial to global shipping. Over 20% of the world's petroleum and at least 30% of global fertilizers, and then not to talk of carrier vessels with container shipping for manufacturing, goes through that narrow strait, which is now shut down as a result of this war. Shipping lines have asked their vessels to take shelter. I think there were well over 400 vessels in and around the strait when it was shut down, and those vessels have had to find ports to berth and take shelter. And whilst they're doing that, the ports in the Gulf region are largely also very, very hugely impacted and not functional. So, what's that going to do to um, the value chain? One, costs will go up exponentially because imagine this: if I was able to drive directly from Lagos to Ibadan on the expressway, and then that's shut down, and I have to now go via a circuitous route that will increase double my journey time. It also increases my the fuel, the cost, the time it takes to travel. Similarly, with the vessels applying oceans, with the closure of the Strait of Hormuz, then it has the impact of increasing journey time and increasing costs. Of course, we've got the Suez Canal and the Red Sea, but that's all in the same region. So it's also volatile and impacted by all of this global uh, uncertainty that has if emanated from the US Israel versus Iran war.
So, when we look at it, the rundown effect to Nigeria, how much can we prepare consumers, the everyday people, to feel? How much can they feel of this pain that's coming from outside the country?
Well, as Ismac said earlier on, and I was watching the earlier part of the program, Nigeria is benefiting from the instant increase in oil prices because of the instability in the Middle East, where a large part of the supply comes from. So that will strengthen the naira um, more or less immediately. On the other hand, we can expect the cost of containerized goods and shipping generally to rise, not because the shipping lines are profiteering, but simply because their costs are going up as a result of the instability in the Gulf region. So it's a plus and minus for us, and something that we just have to uh, bear in mind and learn how to manage as best we can to affect both imports and exports.
Uh,
Fortunately, again, from the industry perspective for Nigeria, exports may not be so badly affected, and I'll tell you why. The shipping lines for a very long time have always subsidized our export cargo because there was just so little export happening, and they didn't want to be going out with empty vessels with you know empty containers, and therefore they would rather have a container with even 10% of what it would normally cost than not stuffed at all, if you know what I mean.
mm.
So from that perspective, our exporters, I don't think, would be too badly affected. But certainly from the import perspective, you can expect an increase in price.
So, is there any way to see, what do they say, making lemonade out of lemon in this situation? So, out of COVID, for instance, we know we're now doing more virtual meetings and interviews. Could this maybe open up some opportunities, perhaps rerouting even on the waterways of trade? Can we see anything like that? Any glimmer of hope or gain?
Well, shipping has been the traditional method of carriage of goods forever. I mean, even the so-called global discovery of the new world and so on was because of ocean-going vessels. So the Strait of Hormuz, the Suez Canal, were opened up to shorten the journey. We can't redesign the world, if you know what I mean. But there may be opportunities if we begin to produce more locally and focus more on exports rather than imports. Because right now, Nigeria is importing from different parts of the world, from China, we're import dependent. And that is really where the opportunity will lie for Nigerian business people and traders. From the shipping perspective, it's a volatile and unstable time. Insurance will rise, no question. Journey times will rise, no question. And costs will rise as a result, no question. And what the liners will do is to try and manage that as best they can and deal with the volatility while trying to keep their assets safe, their vessels and their crew, and of course the cargo that they're carrying with them.
So, well, if this continues, we saw the war in Ukraine, between Ukraine and Russia. That has lasted for over 4 years now. I know at the beginning of that we saw the price of wheat and all of that really surge, and then later we saw a tapering of it. So, if this continues, what impacts, long-term effect, or what hedge do you think is available to a country like Nigeria, an industry like yours that's deeply connected to other parts of the world?
If this continues, then it will become the new normal. And we will adjust to that reality. But obviously, one's hope is that it doesn't continue. Whenever there's a war, there's impact on lives and tragedy that is avoidable. So the sooner we have peace, the better all round. So let's really hope it doesn't continue for too long.
Yeah, we hope for
if
that.
it does, it becomes our new normal.
Yeah,
Post-COVID life is different from pre-COVID.
correct.
And that has become our new normal.
Yeah, well, we hope we only have new normals that are positive, not negative. Well, thank you so much, ma'am, for your time. Ms. Bumala Alabi is a senior advocate of Nigeria. She's also the chairman, Shipping Association of Nigeria, and she wears a whole lot of hats in that maritime space. Well, thank you for your time and views this morning, ma'am.
You're most welcome.
Yes, we're going global now with Aniti Edit. Aniti, good morning.
Morning once again, Ini, and Tuesday, 2nd, 3rd of March. But the news, as we have it, as you've always been discussing, is that it's about this U.S. and Iran, and this time there's an attack on a U.S. facility in Riyadh, that's Saudi Arabia's capital. So,
All right.
So let's start with that. Early this morning, news reports have it that U.S. Embassy in Riyadh, Saudi Arabia's capital, was struck by 2 drones early this morning, further escalating the regional conflict between the U.S. and Israeli-led Operation Epic Fury against Iran. Of course, that attack saw the roof and the perimeter of the Chancery in Riyadh's diplomatic quarter being destroyed, but no casualty were reported there. And the strike had caused limited fire, minor material damage to the facility, while Saudi Arabia's air defense also reported that it intercepted an additional 8 drones targeting Riyadh and Al Kharj early in the night. So far, the U.S. president has said that while he made an address in Washington, he said that Iran will find out soon what the U.S. response will be for attacking Riyadh's embassy and killing 6 U.S. service members. That's within the war which started on Saturday. The U.S. State Department has also ordered that the departure of non-emergency personnel from several neighboring countries, including Bahrain, Jordan, and Iraq, be carried out. So that's warning. So that war is escalating as we speak. And of course, it also has now gone into the European, the Eurozone. The Eurozone, where we have the ECB's top economists saying that a lengthy war between the US and Israel against Iran could spike inflation within the Eurozone, and of course, it could have a ripple effect across the global economy. So the core risks include energy-driven inflation, which is a substantial spike, and headline inflation is likely if oil and gas supplies are persistently disrupted. So the Financial Times, that's the ECB's top economist, Philip Lane, said that the impact will depend on the breadth and duration of the conflict. And he also emphasized that the ECB has been focused on returning inflation to its 2% targets. That's for the Eurozone, while the recent escalation of the conflict in the Middle East, that has really is coming at a time when the ECB is facing a very volatile moment, particularly as it tries to taper down on inflation, which is one of the critical factors for the global economy. So from the Eurozone, we move down to Asia Pacific, which, along with other markets, has been on a downturn. So this time, particularly the South Korea's Kospi was the worst hit. It fell by about 7.24%. That's early today. So the Kospi is about 5,791.91 points. So far, it was weighed down by stocks such as Samsung Electronics and SK Hynix, both from the tech sector. One is a chip maker, while the other one is mostly in the technology space of and of course the market's behemoth there. So, however, the country's defense stocks, they surge with names rising, such as several names across the defense stocks rising as much as 20% there. So that means that as the war is going on, you still have some people making money selling defense stocks such as guns and bombs and maybe fighter jets at the same time. So that has made the shares of such defense stocks to surge more than 20%. But elsewhere within the region of Asia, we see that Japan's Nikkei dropped by 3.06%. Hong Kong's Hang Seng Index was down by 1.25% in the final hours of its trading, while mainland China's composite index, it was down by 1.54% to close at 4,655.9. And from the Asia region, we move to, still within the Iran and US and Israel conflict, we see that Amazon, it's a web, that's what we call Amazon Web Services, the cloud computing side of the tech giants, says that the drones had damaged about 3 facilities, 2 in the UAE and 1 in Bahrain. So that attack was reported on Sunday, but on Monday that report came out, and so many damages and caused outage. So the company has also warned that most users of its service should back up their information in case just to prevent a data loss there. So let's move over to NVIDIA, which is, this is away from the US-Iran war. NVIDIA says it will invest about $4 billion to be precise, in two technology firms. So the 2 technology firms will be taking about $2 billion each. That's coherent and lumentum. So for the what they call the photonics, which is used for technology-related uses. So that's it for the markets.
Thank you so much, Aniti. Of course, most of the stories, as expected, connected to the ongoing war conflict that's going on. So, just looking at our markets now, continuing from the positive sentiments of yesterday, in spite of what is going on, we see the NGX this morning continuing in the green zone. It's up to 195,641.21, 0.06% up this morning in early trade, and the stocks that are most active are Fortis Global Insurance, O&O, Sovereign Trust Insurance. Japok Gold has recovered, is in the green this morning, as well as Jaiz Bank, ABC Transport, and Stanbic IBTC. They're also in the green zone, but those who seem to be so attached to the red color now: Presco, Geregu, Guinness, profit taken up to 10% in early trade. Well, Ladi Williams will be here at 1:30 to give you updates from the markets and other stories from around the world, especially from our continent here in Africa. I'm Ini John Mekwa, wishing you the best of the rest of the day. Bye-bye.